A lot of people ask the question, if interest rates come down, does it really make things more affordable? Does it really change my monthly payment that much? And the answer actually is yes. Now, I'm not saying that if it comes down 0.1%, it makes the world of difference. I'm not saying that. But I'm going to walk through today and show you how, as interest rates come down, how it could make things more affordable for everybody. What's up, everybody? Welcome back to Real Talk Real Estate. I'm your host, Mark Cannon, local realtor here in the Phoenix area with my home group real estate and owner of the Benchmark Real Estate team. Guys, this is a podcast format. I'm here to be real with you. I'm trying to give you accurate information so that way you can make the best decision possible. Not trying to sway you either way, just trying to give you accurate information. So today we're talking through, if interest rates come down, does that really change my monthly payment that much? And the answer is yes, it actually does. People don't understand, listen, I do this for a living all the time, since we've had higher interest rates since 2022, most people have just been buying down their interest rates. We might play with the purchase price some, but typically we're trying to get what's called concessions to buy down interest rates. Why? Because lowering your interest rate impacts your monthly payment more than lowering the purchase price of a home. If you lower the purchase price of a home, let's say, for example, $10,000, on average, estimated, it's about $6 for every 1,000. So you would save about $60 if you lowered the price of a home by 10 grand. So $60 on your mortgage. Whereas if you use the 10 grand to buy down your interest rate, you could lower your monthly payment probably over $100. So that's where I'm going to help you understand, people talking about, interest rates, where are they at now? And how does that impact me if they come lower? I'm going to show you that because obviously it's very unaffordable right now, especially here in Phoenix with people paying a lot of money, whereas we didn't used to because we had lower interest rates. So I'm going to show you, as we're estimating interest rates might be lower this year, lower 6%. Hopefully FHA can get into 5%, what that's going to do to impact you. So let's do a screencast real quick so I can show you guys what's going on. Thanks to our friends at Magnus Title who have provided this app that we can use to kind of estimate these things. And if you want me to do this for you, let me know. I'm more than happy to. So let's say with interest rates, we're going to go back to when interest rates were at 7%. So they were at 7% earlier this year, where we jumped up and it was oh man, we're at 7%. And so we'll actually come down from that because we hovered around 6.8 for a while. So we'll say 6.8. Average purchase price home is about, we'll say 450,000. We'll say people are paying 5% down. This is a conventional loan. Conventional loans, again, I'm not an expert when it comes to lending, but I know enough to be dangerous. With conventional loans, you have less fees than you do with FHA. I can't talk today. FHA VA. You have less fees, maybe a little bit higher interest rate, as the FHA VA loans typically have lower interest rates, but they have more fees. So it depends on the situation where one or the other. If you're putting a good amount down, conventional is probably the better way to go. But it's one of those that, again, that's a case-by-case basis, so you need to talk with a lender about that. Would love to talk with you about that and help you guys decide on that. But we're not going to worry about concessions right now. This is going to take into a case insurance, taxes, all that kind of stuff. We'll say an HOA is $75. All right, so 6.8% interest rate, which is what we were at for a while. So we're going to run these numbers. Let me move myself over here. All right. So at 6.8%, $450,000 purchase price, your monthly payment is $35.65. Okay, so let's remember that number, $35.65. If we just lower this interest rate, today they went to 6.57, so that's down 0.23%. I think it's going to change it by about $60. Yep, $65. So it was $35.65. We lowered the interest rate by 0.23%. And it went down to $3,500. Okay, so we're at $3,500 at today's interest rates. Today's interest rates, $3,500 if you're putting the minimum down. Now, again, I encourage people to put more down than 5% if possible. If you can get up to 10%, 20%, great. If you get to 20%, you have no PMI. So that gets rid of that right there. So again, something to talk about if you are interested in buying. But let's say we move this to 6%. So we're going to go down a whole half percentage point. So this is where we are today. $3,500. It came down $60 on your mortgage just by that. That's without even buying down your interest rate. So let's say by the end of the year, we get to 6% interest rates on conventional loans. We're at $3,500. It brings it down $159 by just going down half a percentage point. That's what lowering interest rates does. That's how, right now, things are unaffordable. with where they currently sit. But as interest rates come down, it's going to make it more affordable for people to buy. So like, let's use another example. So let's say in a crazy world, it's not going to happen this year, but let's say next year we get to 5% interest rates. It's possible. I don't know if it's going to happen. I would think we would probably sit in the mid fives, but let's say it does get to 5%, or you could buy it down to 5%, whatever it is. If you got down to 5% interest rate, you're now it's another $300. And that's where I typically tell people 1 percentage point of an interest rate is typically $300 to $400, depending on the purchase price, depending on a lot of different things, credit score, all those different things. $300 to $400 for 1 percentage point. That can make things more affordable for people. Okay, so that's where lowering the interest rates can really help you. Now, again, is this going to apply to everybody where it's going to make it affordable for everybody? Not necessarily. It depends on your job. Depends on, do you have dual income? With are you married? Like that kind of stuff. There's so many different factors to it. But just showing you, lowering the interest rates can lower the monthly cost. Now, right now, I think prices are slowly coming down here in Phoenix. So with prices slowly coming down and interest rates slowly coming down, we're going to see this become more affordable. So let's say you're buying a $400,000 house. If you can get, let's say, to 6% interest rates at $400,000, you're now at $2,700. For some people, that's very attractive to them. Now let's do a FHA loan real quick. So let's do FHA. Let's change gears here. Let's go back to the $450,000. Don't pay attention to those numbers. Let's go back to the $450,000. Down payment, we're still going to say 5%. That's what interest rates are at today. So let's run this number real quick. I don't know why this is changing. Okay, so, whoa. This thing's like computing without me. Here, sorry about that. All right, so at today's interest rates for FHA, okay, it's $3,300. All right, fairly similar to what conventional was. So let's say these interest rates get to 5.5%. Can't see my keyboard. Let's say they get to 5.5%. Let's compute that. And that could happen this year. You're down to $3,158. And again, this is taxes, insurance, all the things included. Let's say it gets down to, let's say things next year gets it to, let's not go that low. Let's say 4.75% FHA loan. Gets you down to $2,900. Again, that's putting 5% down. So again, I always encourage people, put as much down as you can. If you can get 10%, 15%, 20%, great. You don't have to have 20%. You can have less than that. But that's where different loan types, you can get different types of mortgages. So as interest rates come down, it is going to get better as far as affordability. Now, is it making it affordable for everybody? No, I'm not saying that. But lowering interest rates does make it better for people. So if you're thinking about buying, I'd love to have a conversation with you. I work real estate through relationships. The relationships are the most important thing in my business because that's how I work. I work by referral. So to me, I want to make sure you're taken care of. It's about the relationship over the transaction. If you're thinking about buying, reach out to me. My information is below. I'd love to talk with you. Sit down, talk about your goals, talk about timing. Is it the right time for you? It may not be. And let's set up a plan for you to be ready to buy in a year, 2 years, whatever it is. Guys, you've been listening to Real Talk Real Estate. I'll catch you next time.